Here, this will be a video chart on ticker symbol FNMA. We will take a look at the daily time frame. Can't remember the last time I've done it, but had some questions on it, wondering if I could get it updated. So I'm just going to draw out a couple patterns here. What you see, these lines here are just from previous times I've done the video. This up here is the key level of resistance, and as you can see, since the last video, it's been presenting a problem in terms of resistance. So this resistance up here valued right around the $1.36 area, give or take a couple pennies. And then in terms of resistance, or excuse me, supports, actually I'll talk about that one later. Let's just first talk about the patterns that I see. Really two patterns you could draw here, and keep in mind we're looking at a short-term to medium-term pattern here. Probably if I was choose to pick one, I'd just call it a short-term pattern. So if you're a massive longer-term player, then this probably doesn't mean too much to you. But if you're a day trader or a shorter-term swing trader, then this pattern does pertain more to you. So the first possible option of a pattern is just a descending triangle pattern, which you can see by drawing it like this, and then you can see that because the lows are, or the highs are lower, that gives us this descending triangle. And you could call the support of the pattern right around $1.20, and the resistance is going to be this dynamic trend line, meaning it does change over time. Me personally, I would prefer to call it more of a symmetrical triangle, and you can see there, or a wedge, whatever, but you would have to call it a bearish wedge. Why a bearish wedge? Well, if we look at our short-term / medium-term trend indicators, these three moving averages, the 10-day, the 20-day, and the 50-day, you can all see they have a clear downward slope to them, space in between them. So in the medium to short term, the trend is bearish. I should note that the overall trend, long-term trend, is still bullish because of the 200-day simple moving average, which is sloping upwards. Can't see it on this chart, but if you look at the chart and look at the overall view, you will see that the long-term trend indicator is still sloping up. But as far as medium-term and short-term, don't take my word for it. You just got to look at these moving averages. It is bearish. So because that context is bearish and then this pattern is occurring within that context, that's what makes this a bearish wedge. So now does that mean automatically that the price is going to fall to the bottom? No, it can always bounce, but that's just because of the overall trend. So if the price does break to the upside, we've already talked about that. The first level of resistance that's going to need to be broken is $1.36. If it breaks to the downside, the next level of support is down here at right around, we'll just call it $1. So those are going to be the two levels depending on the break. Again, if it decides to break to the upside, first battle test is going to be up there at $1.36. If it goes to the downside, then the next potential bounce point is going to be down here at $1, which you can see did a great job of bouncing last time. So that's where the chart currently stands going into next week. We'll have to sit back and see what happens. If there are any other questions on the chart, please let me know. If not, I'd encourage you to sign up for our free newsletter up there. When you do that, you'll be sent a free ebook. And if you enjoyed the video and want to learn more about charting and how to use it in your strategy as a trader, I'd encourage you to click below and look at our educational course, over 8.5 hours of video and teaching spread across multiple videos. Been getting great third-party reviews and testimonials. So I'd encourage you to make an investment into yourself as a trader and your education, and check it out. One more time, this is FNMA. Thanks for listening, and have a great Labor Day weekend.